Hey guys, it's Mark Coe for the 7th of March. Wanted to take a look. We've had some interesting developments today in Euro and further breakdown in the E-minis. So I just wanted to take a look. It's been a nice week. Last Friday was a great day in crude oil. Monday followed it up with a move lower in the E-minis, which we've been on from the top. But today I wanted to focus on Euro. So anybody that's heard me speak over the last several months has known that I've been playing this bottom edge between 12.50 and 13 and a quarter as in fact a bottom edge that should be bought. And I won't go necessarily into the reasons why I left out the 12.15 low, but the area that I focus on, just to highlight once again, has been 12.50 to 13 and a quarter, and that has been broken today. We're still 2 hours in front of the close, but it looks increasingly likely that you're going to get that daily close. But so it's a little more important to understand that now that you've broken your level, your 1250 level, the bias is no longer to continue to buy dips. It is in fact to sell rallies. So we've known that since it broke 1250 this morning. I want to talk a little bit about some of the indication we got. Well, the subscribers last Friday, the 1st of March, we all know we went sell side on our bias, daily bias here, went sell side. A big heads up in terms of direction and play. None of it changed the bottom edge. The bottom edge methodology never disappeared, but it was a huge red flag in terms of, hey, this is really pressuring this bottom side. What that also delivered for us was several opportunities on more of our, let's call it swing trade or shorter term momentum to get positioned on rallies back into 1400. So the subscribers had plenty of opportunity, and in fact for a fairly tight market, Euro was able to yield better than a big figure lower, which takes us down to today. And I think this is a significant break. Again, we do have to wait and see what the close looks like on a daily basis, but for now you're breaking a fairly key level, which would look for lower pricing. Again, this is a level we have not seen. I mean, just to go back, you're talking the entire run up in 2017 to get back to these levels. So you're looking June of 17 to get back to these levels. So you're at spots you haven't been in almost 2 years, consolidative breakout. So at this stage of the game, I would continue to look for a stronger dollar, selling rallies in Euro back into that 12.50, 13 and a quarter area. It's a significant break. We'll see if it maintains, but the plan is to go ahead and look to continue to fade rallies in euro dollar. Now let's take a look at the E-minis, S&P futures here, the E-minis. So let's talk a little bit about what we saw in the S&P. It was a big move starting Monday. We were on top of this thing from the top. So we were looking 28.19 to 31 as our top edge. Just bring that into focus, 28.19 to 31. That was our top edge. And on Monday, we traded into 19 and 3/4. U.S. session saw highs of, well, this is the June contract, so prices are going to be just a few points off. Same basic edge, but now we're looking at the June contract, so I apologize. We rolled our contract today in terms of what's on our chart. But the same move, I mean, the same edge, you're just talking the next contract month. And the move lower was about a $2,500 rotation per contract, right? So it was just shy of 50 points, but about $2,500 per contract on Monday. So continue to kind of follow through with our same analysis, which is determining top edge, bottom edge. Bottom edge we were using 2770 as a key level. That broke today. And again, we are going to continue to focus on sell-side E-minis. So we have been sell-side E-minis all week from the top. Unlike a lot of people looking to chase momentum, the momentum on walking in Monday morning was one of buying the S&P or the E-mini. We were looking at from a fade side. Now looking at this full move, you're talking closer to $3,500 now for the week, just being positioned off this move. So you can look at it from a swing perspective, right? Good little move, swing perspective, you're talking better than 70 points. Intraday, Monday had a really nice intraday setup. Tuesday was a little more consolidative. However, there were still some bottom and top edges available. Wednesday was a lot more directional. So been opportunities all within the sell side. So again, when you're looking at it short term, you have to understand what those opportunities are. They are always looking at fade side, right? Fade side when you are here. I'm going to pull up the March contract, which is what we've been on, just to get a little better picture. So this was your Monday intraday look, right? This is just a 10-minute chart, all of which occurs up at this 28.19 edge as your top. Sell count, sell count, huge. Now this is all during U.S. session, right? This is all U.S. session. So this is the one that really paid that 50-point move, right? That was all Monday. Tuesday, a little more consolidative. Wednesday, a little more directional, and today continues it. So, been a really decent pullback, of which we're now seeing about 70 points lower from earlier on in the week. So, you have to think about it when you're looking at rotations throughout a week and trying to really put money in your account. These are the moves that pay you to do so. It's a matter of being positioned short at top edges, long at bottom edges, and having that bias. That's the process you need to repeat and understand. Can I do this in my business? Can I walk in with a directional bias and be able to actually trade that and be able to pull money out of the market, right? And so what a lot of people focus on is just something too tight for their trade mentality. What we really like to deliver in this service is more directional at your edges, at your zone. So I hope everybody's having a good week. I think there's been some good opportunities. I like the continued volatility in FX pairs because it's been really tight lately. The move today in euro, sparked by some more than I would say small comments here. Are certainly good for volatility, and I think it should be welcomed, and the breakout of the range is nice. So anyway, for the 7th of March, I hope you guys are having a good week. It's Mark Coe, and we'll chat with you guys soon. Cheers.